Good evening, guys. Sterling here, the daily market preview for November the 27th, 2017. It is good to be back, finally feeling better. Must have had some type of food poisoning or something because nothing lasts that long. I was down for a week and a half, and I'm still not 100%, but I'm probably 90%. Again, that's what makes me think, or pretty much know, it was some type of food issue there. So, again, good to be back, and let's go ahead and get into the preview. So for today, being that we came off of a holiday weekend, I'm gonna start fresh with cycle. If we have a holiday weekend, if it's just one day, I'm not too concerned with any previous cycle still holding. But in the situation like with Thanksgiving, where you have that Thursday and Friday off as a banking holiday in the States, that's one of those situations where I would rather just start fresh after we come back, and that's what we'll do here for the pound. So for today on the pound, what we're gonna look at. If we take a look at the hourly chart and kind of zoom out a little bit here. Actually, let's go out to the 4-hour. You can see that we broke above our major overall highs right there at 33.24. There's nothing back through here that I like until we get to the absolute overall highs. So there's no upper level that we have other than newly created levels. And what that means also is that this upper point right here, given the fact that there's nothing else in the area, that's definitely going to strengthen my belief in this level, or whether I would use a level or not is not necessarily. And it's the same process I talk about all the time when you're talking about level selection. If there's anything else in the area, well, then you have other options. If there's other options, then there's probably less eyes on that one specific level. But when you have no other level that's in the immediate area, as the case is here with the pound and an upper level, then that level gets a lot of attention, as again, there's nothing else to look at. So if anybody's on the short side of the market, where would stops likely be located? Well, maybe tighter than that, but one thing you know for sure is that if that level starts to go, shorts are going underwater, and if one level puts the entire side of a market underwater, which that upper level would, then you would expect emotion when positions go underwater. What happens when you have emotion? Well, emotion is liquidity, and when you're talking about trading, good point. And 33.53 will definitely be our one and only upper point here today. As we look to lower levels, we have a couple options here. We had a level around 79. The lows here today, the lows from the prior trading day here, that level is at 32.85, and look at the separation between that and the first upper point. Needs to be at least 50 pips separation, and there's a total of 67 pips separation. Actually, that brings up another good point, guys. The ADR on the pound has shrunk below 100. So what we'll be doing is the 25 pip stop will be taken off on the pound. The 20 pip stop will be the max stop on the pound. Side note, I just wanted to mention it and cover that while we were talking about that point. But anyways, 32.85, that'll be the first lower point. Pretty significant level. There's not a whole lot of explanation to that point. There's really no other immediate low in the area either. I would expect the long side of the market to be paying attention to that level pretty closely, as again, there's really no other significant low in the area. If that point starts to go, you have a potential for a little more downside, and so I would expect 32.85 to get some attention. And then below that, on the prior trading day, we also had 32.19, and we can leave in 32.19. It's maybe a little less likely we test that level. And here's a 4-hour chart. It kind of disappears on a 4-hour. As a lot of levels do. It's not that big of an issue, as the level has to be really significant to still be visible on the 4-hour. But looking at the hourly, you can see that level right there was a pretty significant point. Even back here, you had some response. It was a little sloppy with this break up above it and back down below it. But even when you were up above it, you came back and tested that general area, not to the exact pip, but this 5, 7, 10 pip area has been tested many times, and it is beyond the ADR, and the other factors, there's really no other significant level in that area. So 32.19 can definitely stay in for the pound. Same situation with the euro and the open bias, and the reason being is, again, just the holiday weekend. I would rather start fresh. If we take a look at the daily chart, we're kind of right in the middle of this previous range that we held for a month, close to a month back here in August going into September. So there's really not a lot of levels back through there. If you go into the 4-hour chart, still shows the same thing. Again, we've passed these pretty significant upper levels, and the next point that we're going to come into, these overall highs, is quite a ways off. and pretty unlikely that we're gonna get into that level here today. So if we look back at those points, those are into the end of September. And we'll just go have those levels marked here so we can get a reference. That point would be 2091. That's the absolute overall highs, and then you had a little bit shallower level right here, and that one was at one spot 2015. If you go again back out to the 4-hour chart, separation between those two levels 75 pips, so there's more than enough separation between them to use both those levels. The deeper point unlikely to be hit, but 2015, it is possible that we come into that point today. So 2015 can be listed as an upper level today. That is definitely a possibility. And then if we look at the overall highs today, given that we've had a bit more aggressive price action on the upside, because we're coming back and it's a little bit of a unique situation with the holiday market. We've had previous push-ups right here prior to this day, which would indicate that obviously upward bias and probably a valid cycle had we not had that holiday market. So considering that we're taking away cycle, I want to be a little more conservative because again, it is a little bit of a unique situation. So mechanical rule sets are great, but there's times where you have to use a little bit of common sense. In this situation with that potential upward bias, I'd rather be a little more conservative with my upper levels. So for today, any level that I'm gonna look to use as an upper point is gonna have to be at least 50% of the ADR. I just want to be a little more conservative with upper points. What that means is with a 68 pip ADR, it needs to be at least a 34 pip push down. This low right now, we've pushed down about 32 pips. Can officially use it. I've been tossing back and forth. I went to 50% of the ADR so I could disregard this number for you guys because I wanted it to be a little bit larger if I was going to consider using it. Again, with that potential upward bias behind this market. So for today, I'm going to officially leave in the one upper point of 2015, and I'm not going to have in a overall high from the prior trading day until we push down at least 50% of the current ADR, which means we need to make a new low of the day by at least 2 or 3 more pips before I look to use that level. As we look to any lower levels, this is where the levels get rather thin. The lower level here is nowhere near being a valid point. There's nothing back through here that's really all that substantial. The only thing that I would consider, and again, it's not a great level, but it's past the ADR, and it's probably the only reason I would consider it, and that is 1837. If you go out to the hourly chart, you did have quite a few tests through this area the last time we were here. These are all hourly candles. You have 1, 2, 3, 4, 5 wicks that test it, gets above it, 6, 7, comes back down, 8, 9 tests. So you did have a lot of really precise tests of that level the last time the market was around it. It's the only level that's in that area. You are past the ADR. By the time the price gets there, more than likely the 200 EMA on the hourly will be sitting there. So there's a little bit of confluence from that perspective as well. So it does have some factors going for it, but is it an exceptional level? No, but considering all those little factors adding up, that's a situation. This is a perfect example of where it might not be the best level, but you have all those other additional points of confluence with it. Nothing else in the area, a bunch of smaller kind of micro test level, 200 EMA on the hourly is probably going to be relatively close to it. A big factor is it's well beyond the ADR, significantly beyond the ADR. And again, the biggest factor, which we've already mentioned, is there's nothing else in the area. So again, all those factors together, that's why 1837 will be the only lower level that I have in place today, and that leaves us with one lower level, 1837, one upper level, 2015, and that's it for the euro. Again, on the pound, one upper level, one spot 33.53, 2 lower levels, one spot 32.85, and one spot 32.19 to the downside. Nothing else above 33.53. All right, guys, that will do it for today's preview. I'll see you guys back for tomorrow's preview. Until then, happy trading.